I am not a financial advisor. This is not financial advice.
Hi, everyone. Welcome to the podcast. So today we have a lot of good information for everyone. We're trying to set this up weekly. I know we've been a little inconsistent, but we're trying to get back to consistency and have this set up for everyone each week. So how are you today, Solomon? How are you doing?
Oh, good man, living the dream as usual. It's it's been quite the go getting through the bear market. We're obviously still here. But this space isn't sleeping like you were saying before. I definitely want to get back into doing these videos because I think they're hopefully entertaining and providing some value to everybody. So
Yeah, I mean the news has been consistent just because the price is going down. I'm consistently seeing developments happen with not only just from project standpoints but from the regulatory side. As a matter of fact, this document popped up this morning, and it's kind of an amendment to a bill HR 7338. But in this document, they specifically talk about digital currencies. They talk about Russia and the Ukraine circumventing sanctions with digital assets and how there's a real need to regulate cross-border digital assets. Particularly, they're talking about strengthening AML KYC requirements. They're asking for reports on digital assets in 180 days. They're really pushing to get regulations put forth in the name of circumventing sanctions. So on my end, I just wanted to bring this up to everyone and tell everyone because at one point I had to like prove where my money came from. So I was trying to sell like one coin for another, to swap one coin for another, and they made me like take pictures of my bank account, take pictures of like, I spent X amount of dollars to buy this coin, then I moved it to this exchange. So I want everyone to be aware of that because when they talk about strengthening KYC AML, that's what they're talking about. And it probably took me like about a month to prove that my digital assets were actually mine. I could take them off. So if you have bills to pay or something, you're gonna pay with stable coins, you're gonna want to do that before all this stuff kicks in. You get a headache down the road just proving what's yours and what's not.
yeah, no, I mean, I think it's going to be a major pain for people that deal a lot in not only DeFi, but a lot of people use MetaMask to interface with decentralized exchanges. And it starts getting really hairy, obviously. Like if you're transferring from an exchange onto MetaMask, into whatever other ecosystems, back out. I can't even imagine if you're staking and doing things like that, proving that you've, locked your funds up and then that you've received your staking rewards and unlocked your funds. I think, we've got to find a better way to streamline all this stuff because I think, like you were saying, Darren, AML, KYC, all this stuff is going to be, in my opinion, mandatory. Maybe before the next bullish, part of the cycle would start. And then even on top of that, with Russia circumventing sanctions, their first regulated blockchain platform in Russia was, I think this came out 4 months, 4 months ago, was called Atomize, ATOMYZE. And it was just a blanket kind of press release. But if you look into Atomize, very much so dealing in the tokenization of precious metals, palladium, nickel. Actually, the parent company of Atomize is a company called Nornickel or Norsk Nickel, which is like owned by like one of the fifth richest, like 10th richest people in the world, like in like one of these like huge Russian oligarchs. So it's like there's obviously some crazy stuff going on behind the scenes. And actually, Norsk Nickel, the company, is the world's largest producer of palladium and nickel, I believe, as well. So it's like it's pretty interesting to watch what's going on. And if you really do a little bit of digging, you can understand why there would, number one, be some concerns around circumventing sanctions because the tech does exist to do it. And if it exists to do it and they're being blocked out of the SWIFT system, they're going to do it. I think the AML KYC stuff is certainly important to pay attention to because I think that is going to 100% be the standard. That's why when you log on to Coinbase or other exchanges right now, it's asking you to verify all of your credentials again. It's going to be it's going to be mandatory, I think, for 99% of this space within the next couple of years here. So.
Yeah, absolutely. That's the big one, and it's once you set up, once you identify yourself, all of your wallets get tracked. They have machine learning and artificial intelligence, like examining, every wallet that your wallet touches. Now this is kind of like broad spectrum, so they're targeting like whale addresses and kind of like the bad guys' addresses. So if your wallets ever touch any of the bad guys, like your wallets automatically get flagged. So the problem is when you use like decentralized exchanges and stuff and you swap one asset for another, like how does that work? Like if a whale sells me a coin or something that happens to be a bad guy, now my wallet got listed as a bad guy, I'm not doing anything, so now I have to prove my innocence with any of that stuff.
I
So
mean, even with the wallets that got flagged by Tornado Cash, right? With went on with what went on with Ethereum. I mean, it's a piece of code, right? And there were people spoofing people's wallets that had access into certain wallet aspects, and those spoofed wallets were at risk of getting locked out, right?
well, one of the lawyers came back and like argued for the people that just use it for privacy, but what ended up happening is those people had to go to the US Treasury and get like a special license that, like I was using this as privacy. It wasn't doing anything illicit with my funds or anything. So, it turns into this like big process where you're just you just want some privacy, or you just did a trade or something, and it turns into this nightmare for you where you have to like deal with the bureaucracy and go through paperwork and everything. So it's not a pleasant experience for anyone that has to deal with any of that. So
Yeah.
so this is the next piece of information. This comes from the U.S. Department of Treasury. So this came out. It's the future of money and payments. And this is a result of the executive order from Biden that happened a while back ago, 180 days. So 180 days, he gave an executive order for all these reports. And this was one of the reports that came out. So on page 48, they talk about cross-border payments, right? So the private sector payment initiatives have been driven in part by inefficiencies in the current cross-border payment system. To respond to these inefficiencies, countries are making efforts to enhance cross-border payments, both through improvements to the existing system and also with forward-looking work that leverages new technologies. The U.S. also has a strong national interest in being at the forefront of technology and development. So it's kind of you hear these like mixed signals, but overall, like they want the benefits of these technologies, and they can definitely see like where they could fit in and everything. You have some people that are critics, but for the most part, these reports have been more favorable towards digital assets. It's just going to be absorbed into the existing financial system. So all the rules have to be followed, and that's why I invest in XRP, and that's what I believe Ripple's doing it, because they're going through the proper channels and doing things like they're supposed to be doing. And I think eventually that stuff will matter, and this is coming to that point.
Yeah, I mean, I think even on top of that, with that paragraph down below talking about the U.S. being active in efforts to improve cross-border payments, including efforts through the G20, the Financial Stability Board, Committee on Payments and Market Infrastructures. I think all three of those aspects at some point in time have mentioned Ripple, but like in particular where you have highlighted there, Darren, which is the G20. I know that we've seen the G20 mention XRP itself, I believe, and if I'm not mistaken, it's one of those interesting references where they refer to XRP as a stable coin, which is, I mean, we've seen that a few times. I don't know where that reference necessarily comes from, but I do, speed and efficiency, potentially with, maybe volatile fiat on each end, where XRP just moves or operates so quickly as a bridge that it does create that stability mechanism. But yeah, I mean, we've definitely seen very, very familiar names within who the U.S. says they're working with to improve cross-border payments. So that's definitely interesting.
Well, the stable coin part of this, so I think a lot of times that gets misconstrued, but I think what they're saying with the stable coin aspect is the XRP ledger, right? So if you're the Bank of Solomon and you issue dollars as an IOU, and I'm the Bank of Darren, and issue, Turkish lira on my IOUs and we exchange. That was the whole vision of the XRP ledger to begin with. This ODL concept is kind of newer. It's kind of like a bandage until we get to a point where banks are directly using the ledgers and using the protocols to move money around. So, I think that's more of the vision, the XRP ledger moving money around, and I think the ODL model is kind of like to get us to that point where it's like providing liquidity to the endpoints to get cash into your bank or whatever. But I think we're eventually going to move to a point where the financial institutions are doing everything directly on the XRP ledger. We saw that with the Australian fintech. I forget its name, but they recently put dollars on the XRP ledger. I think Australian dollars on the XRP ledger. Novati recently did that. So I think that's where we're moving to with all this. So when we see references to, a stable coin, I don't think it's, there's some magical number that's the stable coin, but they're referring to the XRP ledger as the protocol. The next piece of information that I just wanted to mention was they released another CBDC PDF, the White House. And, this is just showing you, illustrating to you that this stuff is getting done. I remember in like 2017, it was a big deal when Tom Emmer mentioned XRP. Like now we have senators and congressmen talking about digital assets all the time, but that wasn't true a few years ago. Nobody talked about any of this stuff. Now that we're seeing this stuff being rolled out, it's just proving to me that, eventually this is going to come to the surface. And when it does, I want to be positioned correctly.
I think it's insane how much the rhetoric has shifted year over year over year. I remember being here really when I started paying attention, probably early 2018. I mean, a document like this would have been a freaking gold mine back then, right? I mean, but now we see these documents literally come out almost every other day from multiple different nations. The rhetoric has completely shifted at this point in time. It's not just the United States. It's the largest financial institutions in the world. On a weekly basis, how many documents, do we expect to come out from like Bank for International Settlements or the IMF or European Central Bank or whoever it may be? I mean, it's very apparent where this is going. And if when we see that rhetoric shift over a year-over-year basis, they're not just doing this just to talk about these aspects. I mean, they're doing it to really integrate all of these, these ledgers basically into the traditional financial system. I'll be really interested to see what kind of documents we see 2 or 3 years from now, because it's probably going to be, not just hypotheticals. It's probably going to be real world implementations and how to scale that out from the base infrastructure of where it needs to be implemented, and then start integrating other aspects of the real world economy into, integrating crypto and digital assets into the real world economy. So.
Yeah, absolutely. It's they're going to have to scale us out, and then new technologies will need to come just to scaling out. So we'll have to switch it up to kind of research everything that's coming out. So this came out this morning. This is a Fidelity Investment PDF, and it says Andreessen and Horowitz, one of the largest crypto investors with stakes in more than 50 startups, is now circulating its own regulatory proposals among officials in an effort to shape the rules to benefit its portfolio companies. So Fidelity is saying Andreessen and Horowitz is writing up the laws for digital assets and just copying and pasting it to the regulators, and they're just going to stamp off on it, which is kind of insane if you think about it, because they specifically mention the portfolio of Andreessen and Horowitz, rules to benefit its portfolio companies. So like this is the definition of regulatory capture. Like these big guys just come in and make the rules for everyone. It's kind of absurd, but I'm not going to fight it. That's the world I live in. So I'm going to research who Andreessen and Horowitz is invested in and kind of copy them. Like you got the playbook right there. You don't have to do anything fancy here. It's
Yeah, I mean, it is frustrating. Obviously, we talk about level playing field. I do think that efficiency and utility and these ledgers that do have real world utility, like the XRP ledger, are going to be very important. And that's the way that I interpret level playing field more than anything else, is once you have everything interoperable, which assets and which networks can really stand out. But on top of that, I mean, let's make no mistake about it. Big money is always going to be big money, and they're influencing everything that we see from a legal standpoint right now. So I'd like to say that that's not going to be the case when crypto and digital assets are, seamlessly integrated, like on a mass scale into the economy. But it's funny, Darren, that you're like, well, they've already given me the playbook, and now I just have to look at what assets they're investing in. Yeah, dude, but I mean, it's the unfortunate reality, I think, of where this space ends up going. You can even look at what's gone on with Ethereum and consensus and Infura and talks around, is Ethereum really decentralized? Back before even the merge to proof of stake. These are questions that are almost a little bit taboo to ask in this space, but they're legitimate questions. It's like, why not ask the questions and try to actually figure out what's going on here? Because it seems like there's a lot of handshaking going on behind doors. You know what I mean? And you can only polish, a turd of decentralization so much if it's not really decentralized, or if it's people are incentivized to promote regulatory clarity around a portfolio of assets. Like, that's the exact opposite of level playing field, but who's going to fight against it, really,
Yeah, Andreessen and Horowitz is invested in Ripple, so like, a lot of people see Andreessen and Horowitz as like a threat to what Ripple's doing, but they're one of the early investors. So for me, it's like, kind of like a red stamp that they're on board with everything. So I mean, I don't know. And as far as like decentralization, like, there's all these like wars in the crypto communities on like what is decentralized, and like you get into like this philosophy of like consensus algorithms and like all this weird stuff that, like, at the end of the day, it doesn't really matter. Like, what matters is nobody could steal my assets when I have assets on the network, right? Like, nobody can do anything to my XRP or any of the IOUs on my Zum wallet, right? Like, if somebody can do something, then it's not decentralized, in my opinion. So it's like, as long as the network is safe, where I could put assets, not worry about, somebody stealing them from me, which the only example I could think of on the top of my head was Sol Lend, which was a DeFi platform where they voted to lock the whale's money. So like, if the whale sold, the price of the token would go to nothing. So they locked his money in the DeFi platform, so he couldn't do anything. He could withdraw, he couldn't do anything. So like, as long as there's something that can't happen like that, to me, it's decentralized. Like the consensus algorithm stuff is like nonsense to me, because a lot of this, it works. Like, if it works, it works. Like, well, what's the point of arguing about it? But that's kind of like where crypto Twitter's head is always at, is arguing about the consensus algorithm, proof of work, proof of stake, triangle.
Yeah, no, I mean, even within this, you have institutional grade, crypto custody, NASDAQ preparing to launch custody services, which is gigantic. But this is not, it's massive, but this is just more of that adoption aspect that we keep talking about, and not only talking about, but seeing on a consistent basis. Like, I can think of so many different institutional custody services that I've seen over the past handful of months, like Metaco and Citigroup and Fireblocks, and you can even Polysign. Like, there's so many aspects, but there's real world adoption going on. I know you read this one, Darren, but did they talk about timeframes or anything?
I don't know if they in February 2021 Hashdex NASDAQ crypto index ETF. So this is like offering the crypto directly to the institutional investors, and it's like going to be competition to Coinbase and FTX. So, with regulatory clarity, these incumbents that are already set up, they were never allowed to touch crypto, but now all of a sudden they're allowed to touch crypto. So, everyone sees Coinbase stock and stuff like that is a really good investment, but in my mind, there's going to be a lot of competition headed their way. So are they going to stand the test of time? I don't know, but it's kind of interesting to see how this plays out. As a time frame, I didn't see a time frame, but you sent me this article. With this one move, Avalanche is making its possibility for everyone to invest like billionaires. So this was also a NASDAQ article too, and it talks about KKR, which they're going to put $4 billion in healthcare private equity into the Avalanche protocol.
Yeah, a portion of it, which is just absolutely gigantic, right? And this is actually dealing with Securitize, which I know Securitize has dealt with, multiple different organizations in this space. I do believe Ripple was an investor into Securitize, but essentially what they're doing with a portion of this private equity fund is they're going to be tokenizing it, making it easier to access for individual investors who might not have had access to that private equity before, which is pretty massive. And I don't think that this is obviously not the first situation that we're going to see as far as private equity funds that are starting to be tokenized and integrated with different blockchains and DLTs. So yeah, I mean, it's like you and I talk about all the time. I mean, it's amazing to see that just this shift of how much adoption really is occurring right now. And it might seem like the digital asset space is never going to recover, but that's nonsensical, because these organizations are putting in place the frameworks and building out real utility use cases and utilizing these networks in a way that will justify the next leg up in this space. I mean, that's what happened during the previous bear market. That's what's happening during this bear market. Everybody is not stopping. They're continuing to make moves. And it really does come down to, if you want to, I mean, obviously not financial advice, but the best way to be successful really is to follow the money, right? And if you look at, even some of these, we would consider them like higher cap coins, like anything above $1 billion market cap. But some of these, like if you look at like Quant and things like that are, right about $1 billion, like that's a drop in the bucket if there's real world adoption going on during the next, X amount of years. So
yeah, it's so difficult to determine like what price should be, what market cap should be, because like when you have utility into the equation, where there's a demand for the token, or there's a constant demand for the token to access the network, and the network's providing something of value to the people using it, it's like, what exactly is the number there? And it gets really difficult to like evaluate and like put a valuation on anything.
yeah, I mean, that is like it's obviously one of the big argument points, even within like the XRP community, is how can you put a market cap on a currency, but we haven't seen that, until we see that adoption kick in. I mean, market cap's used as an indicator, right? As an indicator for, whether that be TA or value. I know historically market cap is used basically in securities, right? If I'm investing into a company, but that measurement is valid until it becomes not valid, I guess is the way that I would put it. And once we do start seeing real world adoption, yeah, I get it. I mean, I do think that it'll be much harder to measure once you start seeing like real utility of or utilization of like some of these assets and some of these networks. Then you can kind of throw that framework out the window. But until that occurs, I mean, it's still an indicator that we have to use right now. But I think that's what you were getting at too, Darren. It's like, how do you put a number when you don't know exactly how much an asset or a network is going to be utilized? Like once we start seeing that, it'll be pretty insane to watch what happens, I think.
Well, that's why crypto is speculative, right? It's like you don't know. So, I mean, I'm with you as far as trading. I care about market cap. If something's $1 billion or something's $1 million, that makes a world of difference when I invest in something. So I do use it as an indicator. And like you said, it's going to be thrown out the window at one point. But until that happens, there's the market cap's very relevant, and you should kind of, factor that into your decisions.
Yeah.
The next piece of information is I had to move this down because this is creeping me out, this photo. So Gary, SEC claims all Ethereum falls under the U.S. jurisdiction, and they talk about the crypto influencer that was promoting Spark token or something, not Flare, but like a different Spark token. I was like doing something underhanded with it, and they ended up suing him, and they talked about the entire Ethereum ecosystem falls under the U.S. jurisdiction, and it says transactions that took place in the US. Let me bring up. As a result, those transactions took place in the US. So, any type of transaction that happens in the Ethereum ecosystem that happens in the US is now labeled as a security. So, it's kind of disgusting in my view of like how like these regulators don't care about like retail investors, don't care about anybody but who's going to get the biggest slice of pie, and whose budget's going to be the biggest at the end of this. So
I was watching on Twitter, and I've like kind of following the library case a little bit, but they put out a tweet like on the day of the Ethereum merge to proof of stake, and I think the tweet was like, "Congratulations to Ethereum, who've had a completely finished protocol since 2015 on launching their network upgrade to proof of stake," like something like that, where it's just such an acidine, like it's an acidine proposition to say that like the way that we have regulatory, I mean, the Howey test and what the Howey test represents right now, basically saying like the networks need to be fully flushed out. There can't be, promise of or an expectation of value. And you look at what proof of stake represents. And I think that's why we're seeing kind of Ethereum start to, I don't want to see like, I mean, I know a lot of people hate Ethereum, but my opinion is if they try to kill Ethereum through regulations, it's going to set this entire market back like years based on all the EVM integrations across the board, based on whatever you want to base it on. But yeah, I mean, it's crazy to think that like these networks are not fully flushed out. They're continuously kind of being upgraded over time. And that library tweet made me laugh though, where they were just like, "Congratulations on your fully flushed out protocol since 2015 and your upgrade of today with the merge." So
I mean, I agree with you. Like these networks are constantly evolving, so there's no static answer for any of these because they're continuously updating. What's kind of good about this, though, the silver lining is like when they picked a fight with Ripple, they're picking a fight with a company that's got multi-billions of dollars to fight back. If they pick a fight with Ethereum and Consensus, it's the same thing. They're fighting with companies that are hundreds of billions of dollars that are well equipped to fight back. Well, when they're starting to sue people like Spark or a library or some of these smaller market cap coins, they kind of have to just go with the flow. But Ethereum and Ripple can change the laws, can do stuff about it. So the next piece of information is I found out Starbucks taps Polygon for its Starbucks Odyssey Web3 experience. And I've been noticing that Matic has been partnering with Disney, partnering with Instagram. Matic is layer 2 for Ethereum, but it looks like a lot of what they're doing is partnering with the incumbents, and that's kind of like what I like to see with these networks. Is I want to see these large platforms partner up with the protocol, and that's on the back end of the large platform that's doing all this stuff. So this is one of my charts. I found some support here. I don't want to buy it here. I'm waiting for it to come down a little bit. Now, this isn't financial advice. It might come down here and I'm broke at the time and I never buy it. Something like that happens. So I don't want anyone to follow exactly what I'm doing, but I just want to lay out what my plan is in case, as of today, if this happens and I have money here, at like 9 cents, that's where I want to load up on it. But this first spot I think is going to break through, so I'm waiting for this to break through and then try to find the next area of support. That's where I'm going to try to dollar cost average in.
Yeah, I think this was something I was even unaware of. Like you do kind of see, I mean, especially over the past year and a half, you see this large migration of Web 2 professionals moving into Web 3, or even like from Matic's standpoint, the senior vice president at Electronic Arts, or EA, so like EA deals with like Madden and all these games, right? Is now the CEO of Polygon, I believe. So yeah, I don't think that stops either. I mean, because I think all of these all of these people that have been building out, you know, whether that be gaming or whatever you want to deal in, they're really starting to see the value of where we're going to be going with Web3 and digital assets and these ecosystems. And I mean, I think this is just the onset of it. The I guess I would say the suits that are moving over should definitely imply that we're going to see kind of a mass onslaught of more and more people move over, whether that be game developers, or you can really go into any ecosystem and probably make the same similar statements, you know, over time as these ecosystems really grow out. So
Yeah, absolutely. The last piece of information is FASB, which is like the accounting standards. And I heard Michael Saylor talk about, you know, when he was investing in Bitcoin, he wanted the Bitcoin standards to follow like a different standard for accounting, because it was making him look like he lost more or gained more. It made it look like he was a constant loss with Bitcoin, even though sometimes he was at a gain. So this came out this morning, and they said projects added is accounting for disclosure of crypto assets, formerly accounting for disclosure of digital assets. So they're updating the accounting standards as well. So I hope you guys all enjoyed the show. Please let me know what you think in the comments below. Please like and subscribe. Thanks, everyone.
thanks, guys.